And this is the history of Mr. Trump, a complete disregard of debts and of paying his debts. There must be a reason that the dollar started to weaken considerably after Mr. Trump was elected. It may be a coincidence, but maybe not. The gold holders in the world, they should pray every day that Trump lives for a very long time. Gold, the precious metals, have never had a more friendly president. And I would not be surprised that under Trump, the US will default for the first time.
Before the end of his second term. Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and make sure you speak to a financial advisor. Welcome back to another pod. Today's guest is someone who needs little introduction in the world of contrarian finance. Joining us today, the legendary Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report. You can learn more about his work and subscribe to his legendary newsletter at gloomboomdoom.com. Marc has been one of the most outspoken voices in global macro for decades, known for calling major turning points in the markets and offering a refreshingly unfiltered perspective on central banks, asset bubbles, and geopolitical risk. And that's exactly why we have him on today. Marc, welcome back to the show. Let's start with the state of trade in the world. I know you're very passionate about free trade. Let's talk about the protectionism that seems to be sweeping the globe, led by the United States.
Yes, I think that if you believe in free markets, you must believe in free trade. And historically, protectionist measures have not been very favorable for the economy or for peace in the world, whereas free trade boosts the probability of peace. Protectionism is rather a measure of an aggressive policy that is unfavorable for the understanding of people in different nations.
Yeah, and I mean, you believe it leads to cronyism and all kinds of other things as well. Is that right?
Yes, of course. Free trade is basically the natural process, and protectionism leads to a lot of exemptions, and it leads to smuggling and unfair competition and so forth and so on. So I'm opposed to protectionist measures. Mm-hmm. And it would be wrong to believe that the country can become rich through protectionism, with one exception. Say you have communist countries and they turn into the market economy, and immediately the economy takes off and grows at a much faster pace than under communism and socialism, because people have an initiative to work, whereas under socialism, they have no initiative. If everybody is paid the same, regardless of performance, it doesn't boost economic growth. But that aside, at the beginning of economic development, I can understand that so-called emerging economies have some protectionist measures in order to incentivize local industries to compete properly. Right. But I'm not sure that this is actually a fact. I suspect that it is. But in economics, it's very difficult to compare because we can't go back in time. You understand? Once a country develops, and say Korea in the 1960s, 70s, it developed very well, but it had some protectionist measures.
Well, now, even China, some people would argue even today, China still has some protectionist measures.
Not much.
Not much anymore. In the 70s and 80s, though? Is that another example?
Unquestionably. But the US also had protectionism and a lot in the 19th century.
For sure.
And that was one of the reasons for the Civil War, that the northern states wanted protectionism, whereas the South wanted free trade because they exported their agricultural products to the world anyway.
Yeah.
But I understand that some people would think that protectionism is favorable. I wrote a thesis on the subject because the thesis I wrote was the financial reform of Robert Peel in 1842 in England, where he repealed the navigation laws and the corn laws and brought England under the influence of the free traders, essentially under the Adam Smith School of Economics, into the free trade environment and free markets. And these were intelligent people at the time who were in parliament, not like today, what we have in Congress. But they had, these very deep discussions, and the subject was widely discussed. And clearly, the people that favored protectionism was the agricultural lobby, because they didn't want cheap agricultural products to reach Britain. And some privileged people who had, say, factories, they didn't want foreign countries to compete in manufacturing. But in general, for the people, free trade was very favorable because it brought down prices and lifted the standards of living. So we have to decide in an economic system, do we want to favor a few people, or do we want to favor the entire population? And by and large, the population benefits from free trade because they can buy goods at more competitive prices.
Yeah, that's the free markets and capitalism and the invisible hand and everything else. How do you think, with such a wealth of history to draw from and all of these examples, how is it that, a few politicians are able to convince, the millions? Do they use patriotism? How do they convince all these people to go along, with these policies?
Well, I'd say people who are politicians, they can, of course, influence the general public's opinion. And I think it's quite easy to convince the population of a country that their problems arises because of some evil force. The evil force can be, say, Mr. Putin, or it can be Mr. Xi Jinping in China, or it can be the mullahs in Iran, or evil Germany that was having a large trade surplus with the United States, or evil Japan that still has a trade surplus, and so forth and so on. So that is easy to convince people who are not very educated.
Yeah.
And I think Trump and his colleagues are believers essentially in protectionism.
Yeah. No, they definitely are.
Certainly they're believer in protectionism in order to make the population or bring the population on their side. You understand?
Mm-hmm. Yeah,
very
they're
difficult. Using it. For me, it would be difficult as an economist to convince Americans that protection is going to increase the prices of the products and most likely lower the quality of the products, that it would be better to have free trade.
Yeah. I mean, products aside, just looking at the hard numbers, in May, for example, the U.S. budget deficit ballooned to $316 billion, up 14%. Trump, the year over year, Trump is, touting the tariffs that brought in $23 billion that month. But, it's a drop in the bucket. I mean, the debt train has kind of left the station, but I don't see it, making sense. I mean, the trade deficit went up to $71 billion. So it's not like the trade surplus there's no trade surplus, right? Like the deficit's still getting bigger on the trade side. What is this $23 billion a month in, tariffs that they're bringing in that Trump is touting? Does that make any difference going forward to the overall, game here, where the U.S. is able to sort of kick the can down the road and keep going and keep the system alive?
Well, I think this is a very good question. And the answer to it, in my opinion, because different people have different views, in my opinion, under Mr. Trump, the household deficit of the US, also what people call the budget deficit, is going to be up, and going to be up more than people think, because the monetary policies and the fiscal policies of Mr. Trump have to be expansionary. And under these conditions, the bond market will not rally. But I think there is a risk that the bond market continues to weaken over time. Of course, in between, there will be rallies and so forth. And I think as we go into a recession in the US, we could have a rally. But the long-term trend is for interest rates to go up. And under Trump, the interest rates will go up more than without Trump, they would have gone up.
Yeah. And you just touched on something there, Mark, that we have to get into. And, in April, when the world was falling apart and the markets were crashing 3-4% every day, I believe, Trump caved because of the fixed income markets, right? The bond markets forced him to cave and reverse course and, throw these 90-day moratoriums on all these, trade wars that he was kicking off. But to your point, interest rates haven't really come down. And for the U.S. that's expected to pay 1.2, 1.4 trillion this year in interest, that really is, the canary in the coal mine. Like, that is the elephant in the room. How do they get, like you said, okay, maybe a recession, they come off, but is there any way for the Fed to reduce the long end of the curve and reduce, the 10-year, the 30-year in these global bond markets?
Yes, if they keep money tight, they could do it. But it doesn't look as if they would keep money tight, because they have to finance part of the deficit of the US. So I think the outlook is not very favorable.
So
and
you think
I'm sort of surprised that the stock market is still in the sky. I'm not surprised that gold goes up. I'm not surprised that silver and platinum went up, but I'm sort of surprised that stocks are this high, because once interest rates move up, then obviously stocks become relatively expensive compared to deposits. So people who buy stocks today, I'm not talking, of course, there are some stocks that are not terribly expensive and so forth, but in general, I don't think that stocks are at the bargain level by any means.
No, they're hitting all-time highs again.
Yes, they're hitting highs, and the earnings have been slowing down. And okay, there are some stock groups that are not terribly expensive, resource companies and so forth, the miners. But in general, I don't think that stocks are cheap. Now, are there stocks in the world that are cheap? Yes, in emerging markets. And some stocks in Europe are not particularly expensive. But if you tell me that, say, in 2 or 3 years' time, US treasuries will yield 6%, then I don't think that stocks are particularly cheap. You understand? I assume that interest rates will go up. And I assume, and this is the history of Mr. Trump, a complete disregard of debts and of paying his debts. Complete disregard. And this is the president of the United States. And there must be, if you observe market, there must be a reason that the dollar started to weaken considerably after Mr. Trump was elected. It may be a coincidence, but maybe not.
Yeah, that very eloquently put. That's a dangerous combination. No regard for debt and no regard.
It is a toxic combination. The gold holders in the world, they should pray every day that Trump lives for a very long time. Gold, or the precious metals, have never had a more friendly president.
I read that the other day on Financial Sense. He wrote, yeah, Trump is a gift from God for gold investors.
Yeah.
He sure has been so far.
So far.
I just want to come back to interest rates just for a moment. So, again, that's a very contrarian view. Most economists and talking heads have, 2 or 3 cuts for the second half of this year. You think the Fed's going to hold interest rates and even raise them into 25, 26?
Not necessarily, but you understand that what the Fed does is to influence. They can fix short-term rates. They don't fix long-term rates.
Yeah, the world
Now,
does.
I admit that if the economy, as I believe, will weaken considerably, and I believe that, to measure an economy is very complex because you could measure GDP, but GDP is just one figure. What counts is the standard of living of the typical family in Canada or the US. And in my view, for the last 20, 30 years, the standards of living of a typical family has been going down. Now, someone will say, well, we bought the house then and then for 100,000 and now it's worth 500,000 and so forth, and we're wealthier. To this I respond, yes, the house price has gone up, but if you sell your house now for 500,000 and you want to move into a house of equivalent quality somewhere else, you also pay 500,000. You understand? It creates inflation, or the appreciation of homes creates an illusion of wealth, which is questionable.
Yeah.
And most people, the typical households are struggling. They don't have a lot of savings. And at the end of the month, they don't have much money.
I couldn't agree more, Mark. All you have to do is look at a middle-class family. I'm just speaking for North America right now, but, in the 70s, 80s, and 90s, I believe we peaked, Canadian quality of life peaked sometime in the 90s. You could just have 2 regular jobs, buy a beautiful single-family home, nothing fancy, but nice, big backyard, 2 cars, couple of vacations a year, no problem. Today, the youth who are in their 30s, 40s, they're lucky if they can get a 400, 500 square foot apartment. They can't afford anything. Everything's financed by debt. And of course, the top 10% are doing great and fine, but that middle 50, 60, 70%. And one telling data point that you cannot escape is the birth rate. And I'll agree, the fertility rate in North America. The US has done better than Canada, but I'll agree there's some social, influences there, but I believe the driving force, one of the main forces, is people don't feel financially secure enough to raise a family and have 2 or 3 kids, or even 1 kid. I can't tell you how many friends I have that have no kids, and I'm 40, and that's
divorces are very expensive nowadays.
They are, right? And that's something the government is having to wrestle with all over the world. That's happening even in India. They've fallen below replacement rate for the first time ever. They're below 2.1. All over the world, this is happening. And it's almost like gold to me. It's something the Fed doesn't want to look at, and politicians don't want to hear about it because you can't escape it.
Yeah, that's the reality. And of course, no population growth, no GDP growth to speak of. There's a little bit, but not much.
Yeah. Canada has we're running at 0% in 2025 population growth through June 2025, 0. Statistically, 0. And we're seeing huge emigration. Over 100,000 Canadians have left the country in the last 12 months. Which is the most since the 1960s. So we're seeing a sustained surge of people leaving the country, and one of the number one things is the quality of life, but inflation, the cost of living, and
Trudeau, he made his contribution.
He made a huge contribution to that, Mark, and we're going to be dealing with that for many, many, many years. Sadly, the debt that he ran up is just unconscionable. How do you see countries competing for immigrants as we go forward into the 2020s and 2030s?
Well, personally, I'm not all in favor of widespread migration. I think the world would be probably better off by having Germans in Germany and Americans in America and not mix everything together. But that is, to a large extent, a philosophical question and so forth. Some people point out to the US and say the US is a great country because of the migration and so forth. I'm not sure. I'm not sure.
Yeah, you think it's more to do with the policies and the free markets?
Yes, exactly.
Yeah.
And
it's interesting because, countries historically like Australia and Canada, have relied on immigration to grow their economies. But as the living standards deteriorate, it's going to become more competitive to attract newcomers to these economies that have relied on, real estate and other things to kind of fuel their economy. So it's interesting. Yeah, but I presume you don't.
I just like to point out that the big wave of migration occurred essentially in the 19th century when conditions in Europe, social conditions and economic conditions, were very poor. And here were these countries, notably the US and Canada, that offered favorable commercial infrastructure, favorable freedom, and so forth. And so these countries attracted a lot of migrants. And what these countries had is a huge land mass and small populations. So they could actually bear the growing population. And still, if you compare, say, Canada today to China or India, the population density in Canada is not very high compared to these countries, similar to New Zealand or Australia.
Let's go back to the US dollar. It's intertwined through everything here. You've been bearish on the dollar for years. The US dollar index has now got a 96 handle on it. Where do you see it going?
Well, let's put it this way. People say, I've been bullish about gold and silver and platinum for years. Yes, but of course, I understand that markets fluctuate and that trends can have huge counter trends rally. So yes, economically, I'm very bearish about the US dollar. I think it will go down a lot. Now, the question is, are other currencies much more desirable? Because a lot of other currencies are not much more desirable. And for other currencies to appreciate meaningfully against the US dollar can have adverse effects. So my bearishness about the dollar is more against, say, precious metals or, say, cryptocurrencies and so forth. Currencies or currency-similar assets that cannot be multiplied as easily as paper money.
Yeah, they can't be printed. You mentioned cryptocurrencies. Have you changed your beliefs? Have you changed your thoughts on Bitcoin yet?
Well, I think it's not as desirable as a store of value to hold Bitcoins compared to, say, gold, silver, and platinum. But can it go up? Yes, because the weight of money. And here I have to introduce a thought. During monetary printing expeditions that occasionally occur in the world, say Germany in the hyperinflation period, or now in the world, governments are all printing money. Although interest rates are up, it doesn't mean that the money is tight. As an investment advisor, I see huge liquidity still floating around the world. And actually, I would argue that since the Fed started to tighten monetary policy, or that's what they say, by increasing rates in 2022, I don't think that money has become tighter. I believe actually money has become looser. Because if you look at monetary conditions, say you have people that owe money. These are the poor people and the lower middle class. They buy a house, they have to borrow money. They buy a car, they have to borrow money. But the 10% you were talking about, I put them down to 1%. The 1%, they buy a car unless there are tax incentives. For them, they pay cash.
Yeah.
And now, until say 2022, on my cash, and because of the nature of my business, I always hold cash. I didn't have any income on the cash because interest rates were zero. But now I get, say, 4%, 4.5% on my US dollar deposits. So actually, my liquidity has improved, not deteriorated.
Yeah.
And I generate now a significant cash flow on the cash positions, and bond yields are up. So the bond portfolio has a much higher yield than, say, 3 years ago.
How does the Fed keep interest rates up and the U.S. Treasury pay its bills going forward as the U.S. debt goes through 37, 38, ultimately to 40, 50 trillion in the next, 3 or 4 years?
Well, you're asking a very good question, and I suggest that you place a call to Mr. Besant.
They seem pretty confident, but,
Well, they are confident because they know a country like the US that controls the reserve currency of the world, in principle, never needs to default because they can just keep printing money.
Yeah.
And people may not like it, and the dollar may go down. And what it means, if the dollar weakens, it means that bondholders like myself will say, okay, the dollar will go down by, say, 3% per annum over the next 10 years. And I want to be compensated for that 3% decline against, say, other currencies or against gold and so forth. You understand? The moment a currency weakens, you need higher interest rates to entice foreigners to buy the debt.
This is a big problem when you have a mountain of debt, which the U.S. has.
Yes, I tell you, everybody says, oh, Besant is a smart guy and so forth. Maybe he is and maybe he isn't. The fact that he worked for a hedge fund doesn't make him a good Treasury Secretary. And the fact that Trump is a big promoter of himself doesn't make him a good president. I want to stress this.
Yeah. History will be the judge of both of those things.
So far, history hasn't judged him very favorably. Or maybe history has judged him reasonably well, but the stock market hasn't. And the currency market hasn't, and the bond market hasn't. Let's put it this way. And I would not be surprised that under Trump, the U.S. will default for the first time.
Before the end of his second term.
Yes.
Wow.
Who knows how long his second term will last?
They're in the Bannon camp, eh? He's going to run for number 3.
Well, if there is a war, if the U.S. is in a war situation, his presidency is automatically prolonged.
Extended. Yeah. And I think there is precedence for that. I believe it did happen once before. You said the U.S. dollar could go down a lot. We've had other guests.
A lot.
David Hunter's, forecast, we could see a 50 handle at some point on the U.S. dollar index. Do you have any targets for the U.S. dollar index between now?
Zero.
Yeah, I guess there's no limit how low it can go if they keep printing it.
It can go down a lot. And the precedent is actually here. The purchasing power of the dollar has gone down by more than 90% since 1900. It's gone down a lot. But the other currencies are no better. They're the same.
Yeah, so gold is ultimately your safe haven to protect against that, but you got to run your business.
Well,
you're talking about.
I mean, people who own stocks, they've done well.
Yeah.
They've done very well. And people who own real estate, they've done well. Anything that you cannot multiply at the rate of growth, you can multiply. Paper money has done well. Collectibles have done well. Stamps, wines, everything.
Art. Yeah. Yeah.
The worst
Whiskey.
investment, what your grandparents told you to hold, is cash deposits. A safe deposit box in a bank, or deposit in a bank.
Yeah, those days are long over. So yeah, your mantra just continues to be an asset holder. Buy assets with any extra cash. You have to just put them into assets right away.
Well, this is a question that preoccupies me a lot, because every inflation eventually comes to an end. And the inflation of the 70s came to an end. And after 1980, the price of gold tumbled from over $800 an ounce to $250. And silver went down from, I don't know, $50 on the spot market to the low was $2.5 in 1985 or 84. Because I remember at the time I wrote the report that it was a contrarian play to buy silver. I think we have to be careful about asset prices. I think the residential property market could go down substantially, especially, as I mentioned before, if interest rates go up and not down. I think residential properties would be hit very hard.
We're already
and by
seeing
the way, they've been hit already, the down in Canada and the US in some cities by, say, 15% already. And especially condo prices.
You're absolutely right. Yeah, there's a glut of supply.
I would not overdo the asset game play and leverage myself, because it may come to an end. And then the question should be for investors, if it comes to an end and asset prices go down, what will go down the least? And this is actually the reason I own precious metals. I think they will go down the least, because in an asset deflation, you have massive bankruptcies. I mean, massive. And in an asset deflation, the conditions become so bad in an economy that many companies and banks and so forth will fold. And in that situation, I think people will say, well, I don't give a, I don't care about the returns that I earn on my money. I just want to be invested in something that still at the end has some value.
Yeah.
And under Trump, I think there's a good chance that the dollar has no value at the end.
When you look back to the 1970s and that inflation belt the U.S. had, it wasn't, 10, 20%, and it was bad, but, it took 20% interest rates. They got it under control. You look back to Germany, the Weimar Republic, it was everyone was loving it, right? Until they weren't, right? Everyone was in the markets, everyone was making money, and then it went parabolic and everyone kind of got wiped out. How do you see this episode ending? You talked about, yes, it will end at some point. The deflationary cycle will begin. Every cycle, emerges eventually. But, I feel like the inflation game is going to continue to be played for the foreseeable future. But are you saying that it could end? It could be closer to the horizon, like could be closer than we think. Are you expecting like a blow off top in inflation sooner rather than later? It sounds like it.
I have a very precise answer, which is I don't know.
Yeah,
I don't know, because we are in an unprecedented period in history, in the sense that central banks can print unlimited money.
Mm-hmm. Yeah, a lot of
unlimited.
People, I know. The Weimar Republic, the people with debt made out extremely well because they were able to pay everything off with the, the phony money, right? Like as the asset prices exploded. But yeah, if we enter a deflationary period, I mean, who do you think the big winners are going to be?
Well, as I said, first of all, we have to define what is wealth. Say we all start at 100 and assets go up the general price level to 200 and you are up only to 150. Your wealth, although nominally it is up to 150, has diminished because the typical wealth is up 200. So you compare this to the man who we all start at 100 and everything goes down by 50, so we're down to 50, and someone is down 80%, and someone is down only 20%. So the question to you is, what would your arbiter be? Everything goes down by 50% and you're down 20%, or everything goes down by 100% and you're up 50%? You understand? But the one who is down 20%, relatively speaking, is down on his assets, but he's up relative to everybody else.
Yeah,
And that is the key to great wealth accumulation, is to have money when everything is very bad. That is the key. And most people, the great wealth is lost because they don't have money when everything is cheap.
And for you, one of your leading hedges or safeties obviously is gold. You believe it'll go down the least?
Yes, I think so. I mean, at the moment, I'm particularly positive about platinum.
Okay.
I think if, say, 2 or 3 governments in the Middle East, they have large reserves, I think what they should do is squeeze the platinum market. They could squeeze it up to, say, twice the price of gold, to $6,000, because the platinum market is not a big market. It's much smaller than gold. To squeeze the gold market is difficult. But the silver market is also very big, and they managed to squeeze it once in the late 70s.
Yeah, Hunt Brothers.
But the platinum market is very small. South Africa and Russia, together, they could easily squeeze it.
And they're both brick nations.
I should go around the Middle East and tell the sheikhs that they should accumulate a few tons of platinum each and squeeze the bloody thing up.
They're sure buying enough gold, so yeah, why not add platinum to the list? That's interesting. Yes. So yeah, looking regionally, like, you know, around the world, which countries do you like? Which areas of the world do you think are going to outperform here?
Well, I think that Asia has been, I mean, in general, emerging markets have been in bear markets for 10 years against the US, in some cases 15 years, relatively speaking. And emerging markets and European markets, statistically measured against the US, are very cheap on valuations. So I focus on emerging markets. And then I look at markets that are really out of favor. And I look at markets that the American media hates and talks down because they are biased. And no country has gone, in terms of being optimistic about the country or the city, to extremely pessimistic views. No country has done this as well as Hong Kong. Hong Kong, when China opened up, was going to be booming and this and that. And at the time, I was bearish about the property market in Hong Kong. And I wrote a book about the rise and the fall of cities. But now I think the stocks are selling in some cases at 80% discounts to the asset value. Now, I admit that the asset value has to go down somewhat, but I don't think it will go down by 80%. And number two, I travel around the world and I see different cities and different societies. I think Hong Kong and Singapore, and by the way, also the cities in Thailand and so forth, they have a huge advantage in terms of people feeling safe. It's very seldom that someone will rob you in Hong Kong or mug you.
Yeah.
And practically out of the question in Singapore.
Yeah.
So these are very peaceful. Say you have a family. I think to live in a peaceful environment and that you don't need to send your children to school with 3 bodyguards and that you don't have to go to your office with 5 female bodyguards is a huge advantage.
Yeah. People, the affluent will always pay a premium for that. And even, the middle class and upper class are seeing a lot of cities in North America just become cesspools, right, of crime and,
Yes,
homelessness and the
cesspools.
drugs.
That's the word. Cesspools.
Yeah.
Thanks to government policies.
Yeah, it's a tragedy. It really is.
But
Mark,
anyway, I just wanted to say that whereas the mood in Hong Kong and for properties was very optimistic, say 10 years ago, now it's overly pessimistic. And I'm interested to buy assets which are surrounded by extreme pessimism. Now, extreme sentiment existed, say, in Argentina 2 years ago. And what happened last year? No, 2 years ago, the market went ballistic. So if you buy things where sentiment is very negative, you have a chance to have substantial capital gains. 4 years ago, Turkey, nobody wanted to touch it, and then it went ballistic as well.
they've had a big inflation problem. Have they got that under control? I know it was running at
No,
40, 50,
they don't.
40, 50.
But that's why I'm telling you, if you can print money, you can keep the whole thing going for a very long time.
Yeah. Yeah. Let's end on
Turkey
that
is
note.
basically a dollar economy. People will value properties in dollars.
Right. They've adopted the US dollar pretty much.
Say as a measure, as a store of value, yes, but they're also big gold holders.
Right. Yeah, they've been forced to, right? And I mean,
yes, absolutely.
All of these trends, Mark, wrapping up here, obviously you don't know when this is going to happen, right? Like when we're going to see this shift. What's something that you're looking for that would kind of really let you know that we're either entering the final stages of inflation or that the cycle is about to shift? Is there something
It's already happened? They elected Trump.
Yeah. You think that's it? You think the die has been cast?
Yes, in my view, I think we're going to go into high inflation rates. What I think, I always hedge because many times in life I've been wrong. So I wouldn't go out and borrow money and be all in assets. But in general, I think that although gold and silver and platinum have gone up a lot already, I think in some cases, silver and platinum, the increase has just begun.
Biggest moves.
I think we can go to a very high level. Because if I compare the whole financial assets in the world to the value of gold, silver, and platinum, then the value of gold, silver, platinum is very small compared to the whole asset value of financials and also of assets in general. And I look at ETFs. Basically, in a real bubble, the asset value of ETFs would go up a lot. But actually, the number of shares has diminished. So it tells me the public is not really into gold in a meaningful way.
Yeah. And the miners are giving us a clue there. Like they haven't even exceeded their highs from 2011.
No.
In many cases, some of them are down.
Yes.
When do you expect the miners to really get in on this gold rally?
Well, this year they've performed well.
They have.
But in my view, what you say is correct. Compared to the gold price, they've performed very badly.
They've underperformed.
Now, it may be a reason that the people running mines are hopelessly incompetent. That may be a reason.
There's always a chance of that.
I'm not saying it is, but there is a chance. The market seems to have a low opinion of the management of mining companies. That for sure.
Definitely. I think it's to do with the performance of the U.S. equities over the last 5-10 years. It's just been so good to shake people out of that trance. I don't know if it's about gold going through 4,000 or 5,000. I think what's been working, tech stocks and U.S. equities has to take a pause and open the door for these gold equities to outperform.
I think what you said is the key question that investors should ask themselves. Traditionally, if the leading sector, say, in 73, we had the Nifty 50. These were stocks like Xerox and Kodak and Polaroid and Sears and so on. Most of them are out of business. But they were the Nifty 50 that institutions held because they were growing rapidly and so forth. And when they went down, they brought the whole market down. But in Japan, in 89, Japan was 50% of stock market capitalization in the world, 50%, with a population of 100 million people, 120 million. When they went down, the money flowed somewhere else. It flowed mostly into NASDAQ in the US and also other emerging markets, but mostly into the NASDAQ, and the tech bubble then developed in the late 1990s. So the question is, if you look at the Max 7 stocks, they make up, so technology and the Max 7, they make up something like 30%, 35% of stock market capitalization. What will happen if they go down? Will they bring down the whole market, or will the money shift into the miners, into oil stocks, into basic stocks, and so forth, and emerging markets and European stocks? Who knows? We don't know for sure. But it's a possibility that the bear market in one sector of the US, namely the tech sector and semiconductors, that bear market doesn't hurt other markets and be beneficial for other markets, as you just suggested. It's not something I would necessarily bet my house on.
No.
But it is a possibility.
The potential outcome. Yeah. Yeah. And I mean,
we have this in 2000, we had the tech bubble. The tech bubble then deflated, and what then performed well after 2000 is not the tech stocks. It was, the home builders, the subprime lenders, the banks.
And the miners, the materials started.
Also, yes.
Marc, we love to give our guests a final word. Do you have just a final word of advice for our listeners, our viewers, our subscribers?
Well, I think it depends what your objectives are. I think we had a period of unusual asset inflation after 1980, and monetary conditions were favorable, economic conditions were favorable. The opening of China, no matter what Trump says, was very favorable for the US and for the world. And now we're moving into a period that will be less friendly for asset holders. This would be my view. And if it's very friendly, it will be socially unfriendly, because it will make the 1% or the 0.1% even wealthier. And it will lead to a lot of animosity that usually lead to civil wars and social unrest. So as an asset holder, I would be very careful to wish that asset prices continue to go up.
On that note, we'll let you go. It was a pleasure and an honor having you on. Thanks again, Marc.
Thank you very much. Bye-bye.
Bye now.
And all the best to your viewers and to you.